Are you ready to bring in some monthly cash flow with a dividend challenger that pays out a monthly dividend? Well, if so, there is a company that we will be discussing today that gives you that exact opportunity. Not only that, if you stick with me to the end, then we will also be discussing and breaking down this company's dividend to determine if it is safe or not and what its safety rating is with three of the most prominent investment sites out there. With all that being said, let's dive into the content. What's up, friends? Thank you so much for coming back again for the 12th installment in our financial friendship. I appreciate your time and I know it is precious. I never want to waste it. Guys, I work very diligently to give you quick, concise, accurate information to bring you financial benefit. In return, I ask for two simple things. Please hit that like button as it greatly helps out this video to get the content out there. And also hit that subscribe button because it greatly helps out this channel overall. Guys, I am also going to be starting something new, starting with this video today, and it is a random subscriber shout out. What that means is one lucky subscriber with every video from here on out will get a special shout out as a thank you for your support. In order to be qualified for that shout out, number one, you have to subscribe. So hit that subscribe button if you haven't already. And number two, just drop a comment below and say, I subscribed. I will reply to you specifically as a thank you as well. Now, the first subscriber that I want to shout out is the one who is my number one fan, and that is my wife. Lauren, I love you. Thank you so much for everything you do. Thank you for your support and everything, including allowing me to take time to put into this channel. I do appreciate it. But guys, with that being said, let's get into what everyone has come here for. The dividend challenger paying out a monthly dividend in order to bring you some monthly cash flow. And also they have a professional relationship with one of the most successful and largest companies in America. Guys, this week's dividend stock of the week is STAG Industrial, ticker symbol STAG. STAG Industrial Incorporate is a real estate investment trust which focuses on acquisition, ownership, and operation of single-tenant industrial properties throughout the United States. The company was founded by Benjamin S. Butcher on July 21st, 2010, and is headquartered in Boston, Massachusetts. Now, STAG Industrial is a real estate investment trust. If you do not know what that is, have no fear. I've made a previous video regarding them. I will leave a link in the description below, and also there will be one right over here that you can click on as well. But STAG Industrial is a real estate investment trust that specializes in industrial properties. STAG Industrial currently holds 501 buildings and occupies over 100 million square feet of property. They have properties across 39 different states, and as of June the 30th, 2021, the company has properties with a market value of $8 billion. The top 10 tenants include Amazon, XPO Logistics, Eastern Metal Supply, Trimos Corporation, FedEx Corporation, American Tire Distributors, Penguin Random House, West Rock Company, D.S. Smith North America, and Hatchet Book Group. Now, obviously, one of those companies jumps off that table at you, right? Penguin Random House. Just kidding. Obviously, it's Amazon. Amazon is one of the most successful and largest companies in America, and they continue to thrive. They are currently the top tenant for STAG Industrial and occupy approximately 4% of their total square footage. Second then becomes XPO Logistics, which holds only 1.2% of their overall square footage, and their top 10 tenants only occupies 12.5% of their total square footage. Now guys, what that means is 87.5% of their square footage is occupied by people outside or companies outside of their top 10 tenants. That means this company is extremely diverse. Now, when you're talking about a real estate investment trust, diversity equals stability. And even in the worst of times, this company has remained very stable. During the recent pandemic, this company not only was stable, but they thrived during the pandemic, and that was mainly towards the push in e-commerce. E-commerce companies need distribution centers. That way, once they get orders, they can package, organize, and disperse them out to their customers. Now, because of this, This company has thrived. STAG Industrial has thrived during the pandemic, and they actually had an increase in income by $152 million during the pandemic. This company has also grown substantially since their IPO in 2010. They have increased their overall buildings by 431% and their overall occupied square footage by 598%. That also being said, since their IPO in 2010, they have paid out dividends consistently, and they have increased their dividends over the past 7 years, making them a dividend challenger. They have sustained revenue growth over the past 5 years as well, and they are up 17.22% over the past 5 years, and they are up 12.1% over the past 3 years. Now, due to the IRS requiring real estate investment trusts to pay out 90% of their taxable income in the form of dividends to shareholders, increased revenue equals increased taxable income, which equals increased dividends for you and I in the future if you are a shareholder. That's why a recent poll of 12 prominent investment analysts by CNN showed STAG Industrial to be rated as an overall buy, and it has been since December of 2020. Now, it wasn't a unanimous buy rating that they got because there were a couple that said that they should hold, but they have consistently been rated as an overall buy by these prominent analysts since December of 2020. Now, let's take a look at some of the financial fundamentals of STAG Industrial. As of August 1st, 2021, STAG Industrial has a stock price of $41.82. They have a market cap of $6.84 billion with 162.04 million shares outstanding. They have a dividend yield of 3.51%, which equates to 12 cents per share per month or $1.45 per share annually. They have a payout ratio of 37.16, and they have an EPS or earnings per share of $1.11 per share. Now, guys, those last two figures may jump off the page at you, and you may be thinking, oh, well, this company is not sustainable. They have an EPS that is less than the amount that they pay out in dividends annually. But that is because these metrics you cannot use when analyzing a real estate investment trust. Because they have to pay out 90% of their taxable income in the form of dividends to prevent them from having to pay the government a corporate tax rate, you can't go based on the traditional metrics like a payout ratio or an EPS. A more substantial metric that you would go off of is FFO, or funds from operation. That is what you should really use when analyzing a real estate investment trust, because it takes into account depreciation of properties, the dividends that they pay out, and distribution. STAG Industrial has an FFO of 49 cents per diluted share in the quarter of 2020, which was an increase of 4.3% from quarter 4 of 2019. A generated core FFO of $75.5 million in quarter 4 of 2020 compared to $65.5 million in quarter 4 of 2019, which equates to an increase of 15.4%. And that is why this company's dividend overall is very safe. And the Motley Fool, Yahoo Finance, and Seeking Alpha all rate this as a safe dividend. Now, I know I've hit you with a ton of information. If you feel like you've missed any of it, please do not hesitate to go back, rewind the video in order to make sure you do not miss any of that valuable information. Speaking of valuable information, if you missed the last dividend stock of the week, we talked about Verizon Communications and how that company has a stable dividend north of 4%, and they are primed for continued growth in the recent future as there is a continued push towards 5G technology. Guys, with that being said, please understand that any of the information that I give you on this channel, whether it be this video, the video over Verizon, or any video, it is for entertainment purposes only. It is not financial advice, as I am not a financial advisor. So what you have to do is do your own due diligence. Make sure that you go and you analyze these companies to determine if they meet the parameters of what you find beneficial in your dividend portfolio. Guys, please do not forget the motto of this channel, which is educate yourself, invest wisely, and be prosperous. I wish nothing but prosperity on absolutely every one of you all. One way for some prosperity is by getting some free stocks. Check out the links in the description below. Also, guys, please know that I value your time. I know it's precious. I never want to waste it. If you have found value in the time that you've spent with me right now, then please hit that like button and hit that subscribe button because it greatly helps out this channel. Also, please know that until next time, I will miss you. I love you. Peace.